everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand it tomorrow. And today, we're taking a look at the crude oil futures. Now, the crude oil futures as a whole, for the most part, had a relatively bearish start to the day, but they ended up giving a lot of it back after we started opening up for the U.S. session. Now, given the fact that we've been bearish for pretty much all day up until the U.S. session start, we have to be thinking initially that the sellers may want to try to take this back down to the lows. And it makes a lot of sense. The sellers probably aren't going to be that willing to give up their position so quickly. And, well, they took a little bit of a struggle before the buyers finally took back over. So what are some clues that we can pick up on to know that, hey, this isn't doing so good for the sellers anymore? When do we look to reverse positions, right? So we have the sellers that have been pile driving the market down since arguably 1 o'clock. Big move down, continuation to the downside. You can see a beautiful slope to that. And a little bit of range bound and inevitably another nice breakdown. So we're getting good continuation moves lower. But then we see this, right? The biggest move of the entire day. And it happens after this trend has been going on for a very long period of time. It's been going on since 1 o'clock, and 4.5 hours later, then they have the biggest breakout. It's a little bit of a sign of potential exhaustion. It's almost like they're giving it that final, right? Give it that final push, and then kind of back off the gas pedal a little bit. We don't know that for sure, but it is a big clue to tell us, well, we might want to hold off a little bit once we start, seeing a little bit of weakness. If they keep going, then great, but if they start having some trouble, could be a sign of a little bit of an issue for the sell side. We get a correction back to the moving average, the sellers drive it down again, but notice the difference here, right? They get a twin reversal on the lows, they poke their head down and immediately pop right back up. We're not seeing this kind of follow through anymore. So once aggression is now turning into a little bit of a calm, they're holding off a little bit. Nobody's really willing to sell through the lows anymore to get those breakouts, and it appears as though the sellers are losing faith. We come back to the lows again, and now they can't even make a new low before reversing back to the upside. So there's some huge red flags that at the very least, sellers are going to want some better prices to sell into. They no longer have the belief that it's going to push down on the pullbacks to the moving average, maybe a 50% pullback, whatever it is. They're no longer looking to sell there. They're looking to sell higher. And a lot of times selling higher could mean prior swing high breaks. It could mean a prior swing low retest area. A lot of that kind of stuff will start lining up. So when we start coming in, we're looking at this area thinking, okay, well, the sellers obviously are going to want a better area of interest. What better place than the major swing high when things started getting a little bit shaky, right? So we come up to that prior swing high, they poke their head above it and then push right back down again. And that's a good sign that the sellers are taking over for an attempted move lower. So I do like that as a selling opportunity. I didn't have it initially marked because of the fact that I wanted to go through the context first. It's hard to just say, oh yeah, slap an arrow there, that's where you'd sell. Well, there needs to be a reason behind it, right? So a little bit of context goes a long way, and that little trap high is where a lot of sellers are going to give it one more shot to finish that job off. Really good follow through. The market pops back up again, and notice where it has a hard time, right? That prior swing high, they run straight back into it. They can't break above the highs, which is where all of the seller stops are going to be, and they push back down again. Now we start running into a little bit of a red flag. Huge bear engulfing candle to start the day off. That was the 9 o'clock candle. And then the follow through of that massive bear bar is bullish? Yeah, something's up. So that's not quite right. That's not what the sellers want to see, and it's happening right on top of the prior low of day, right? That whole area has been an absolute mess since we hit it, and now they have a bull failure after a huge bear engulfing candle. Not many traders are going to stick around to see what happens next, and they're going to start exiting above there, and that causes a nice rally to the upside. Now that bullish rally kept going and going and going. It broke to new highs. We start seeing the reversal setting in where buyers are beginning to take over. And we have a huge consecutive burst of buying pressure. We have 1, 2, 3, 4, 5, 6, 7, 8, 9 bull candles back to back to back to back all the way up. A little bitty pullback coming down. They can't even pull back to the prior swing high before turning back up with a strong bull bar. That is a good clue that the buyers are coming back in for another pop to the upside. And that led into a beautiful scalp up before pulling back once again. This is where we kind of switch gears a little bit. The sellers were selling off of the moving average the whole way down until they found weakness. Now it's the buyer's turn. We come back in towards the moving average and notice the area that we start reversing on. That major swing low that we were talking about, those major swing highs that we were talking about, you notice something kind of stacking up a little bit inside here? Yeah, both of those create a very strong bullish interest location, right? Buyers are buying into this like it's candy, not to mention the moving average, and it looks to be about a 50% pullback there as well. Every buyer, for a lot of different reasons, are buying in at the same location, and that leads into a beautiful bull rally. But if you didn't want to take that first bounce, that second candle sure sealed the deal. That's why I have two arrows there, because either one is totally fine in this context, and that led into a gorgeous rally going into the lunchtime session. So a beautiful day on crude oil if you were patient enough to play the context out and know and understand what's happening behind those candles before jumping on in. Hopefully you found it useful, entertaining, maybe a little bit interesting, and something you can add to your repertoire when you're looking at the markets. Outside of that, though, enjoy the rest of the day, and we will see y'all later.